Hello everyone, I'm Edwin. Welcome to the second episode of Personal Finance and Investment. The last episode we analyzed what happened in 2020, so it's time to jump to talk about what is my expectation on the asset market in this year. When we make any economic forecast, it's always better to divide the analysis into two parts. The first part is to make a baseline valuation based on historical data and evidence. The second part may include some subjective judgment, which means we need to analyze the news and market information to make prediction about the future development. And then we use this prediction to adjust the baseline value up and down to get our final prediction on any economic variable. Okay, so to kickstart the prediction, we first want to know about what is the chance of an up market in a certain year. Many people think that it is 50-50, but it's not. If we are going to predict the price movement of or on a single date, for example, like tomorrow, then the probability is close to 50-50. But if we are predicting the movement for 1 year, the probability of an up market is definitely not 50-50. So taking S&P 500 as an example, the following figures show the performance of the index from 1930 to 2020, and green bar represents a rising year and red bar represents a falling year, and you can see that the probability of an up market is much higher than that of a falling market. So we can know that the baseline probability of an up market is approximately 70%. Well, someone may ask, is it okay to do in this way because it just look like we are those gamblers jotting down the results of in the casino to make prediction on the results in next game? Even though stock market return or asset market return has random component, but the return did exhibit an upward trend. So therefore, the chance of an up market is definitely higher than that of a down market. Then the next question is, what is the magnitude of this uptrend? In other words, how far can we expect the stock market to go in this year? So again, taking the S&P 500 index as an example, the historical data shows that the expected annual return is above 10%, so we can assume that the baseline expected return in 2021 is also 10%. This is exactly the reason why Warren Buffett recommends investors to hold mostly S&P index funds for investment, as it provides low-cost features and then relatively stable risk structure and also relative high return of 10%. Okay, after doing the baseline analysis, we know that the chance of an up market is 70% and expected return is 10% in 2021. Then we now do the second stage of analysis by doing deduction on the news and current market situation. We first have to consider the impact of quantitative easing. Since there is a flood of funds in the market, the funds have to invest in something at the end. So therefore, we can expect that a lot of hot money will flood to different asset class. In addition, it's highly unlikely that the government will use contractionary monetary policy to tighten the money supply. So this is a good news to asset price. And second is about the development of the epidemic. We can see that the number of new cases per day was dropped from its highest 700k in December down to 200k in this month. As more vaccine will be available in the coming few months, the number of new cases can be expected to drop further. So during the last year, people accumulate a lot of wealth from the appreciation of asset price, and also they reduce their consumption, so they actually reserve a lot of purchasing power for future consumptions. And once people are free to travel around the world and life back to normal, we can actually expect that a tremendous increase in consumption will be happen in the coming few months. And it will need to a clear V-shaped economic rebound, which could be another driving force for asset price. So the third issue that matters is the GameStop event. The incident made short sellers realize that the risk of short squeeze is much higher than that expected, and the losses can be multiple times of their investment. Therefore, we can expect that short selling will be significantly reduced in this year. For example, Citron Research Andrew Leff has decided to stop issuing short selling reports and focus more on long-term investment. And Moody Water, Carson Brock also stressed that the risk of short selling is much higher than before. As short selling is constrained, we can expect that many asset bubbles may be created in the market, especially for some small stocks. And now it's time for us to consolidate everything and come up with the forecast for 2021. Since there is already 2 months past in 2021, it's not fair to make prediction from January to December. So the following prediction is going to predict from the 1st of March 2021 to 28th of February 2022. So according to the historical data, we know that there is a 70% chance that asset price will continue to rise in this period. And next, the expected return is expected to be 10%. We can also see that the market risk appetite is very high, that they are willing to take risk for return. Also, the current market development seems to favor to the asset price. So I will adjust the probability for upmarket from 70% to 100%. And then expect that the stock market will provide an average return to 20% or to investor. But we always need to bear in mind one thing, which is behavioral bias. It could be in place when we are making prediction. Since I already have a long position on stock, my prediction could be a result of my wishful thinking. Therefore, I would like to give a discount on my adjustment on the probability of about 50%, so making the final probability of upmarket down to 85%. And also for the expected return, I also discount 50% of my adjustment, so the expected return will be 15%. Then under this expectation, what shall we invest? In this market situation, it's not uncommon to find that some individual stock could rise for more than 100%, but it's hard for us to pick up those among thousands stock. Therefore, I would like to recommend non-professional investor, instead of betting on a few bets, why not buy them all? So by buying an index fund or some thematic funds, we can actually benefit from the diversification. So it means on average, we can achieve better risk return trade-off. And as long as the market is in an uptrend, we can definitely be benefit from this trend, rather than just testing our ability to pick up the good stock. Then I have 3 suggestions for you: Set A, Set B, and Set C. Set A is 100% index fund. This is the most recommended option. And also Warren Buffett also recommends investors to invest mostly in low-cost index fund. He suggests investors to buy S&P 500 index fund. It is definitely great, but I think less than index fund, Hang Seng index fund, or Hang Seng Technology index fund are also good index fund to invest in the coming years. So you can buy one of them, or you can invest in more than one. Maybe in next video I could explain more about my rationale why these 4 index funds are that recommended. And then next, Set B. Set B is relatively tailor-made for active investor that wants to make a bet on some sector or on some theme. So those investors can spend 50% on index fund and then spend another 50% on some thematic funds like electronic vehicles, chips, or biotech companies. Compare with investing in one or few companies in an industry. The advantage of investing in a sectoral fund is that it can save our time on researching companies or many companies in this field and do not need to risk our portfolio on our stock picking skill. So as long as the industry outperforms the market, your return would be nice. Then set C is for active investor. So in this case, I still suggest you to use 1/3 to invest in an index fund, and then 1/3 in thematic funds, and the remaining 1/3 you can trade any individual stock you want. So first, it can meet the demand of some people to getting excitement from active trading or in stock picking, but it also provides great mix of speculation and investment so that you have a balanced portfolio. Moreover, investor can then let the result to say. For example, let's say after 1 year, you can review the results and see which style of investment provides the highest return to you. And then you can adjust the rating so that after several years, you can find the optimal one that fits you the most. This is my suggestion on investment strategy in 2021. And I found one interesting thing is that actually my prediction on 50% increase in the stock market is quite close to that of other practitioners, and you can see that their estimate are also around 14 to 18%. And if you ask me to give a target price of each index on the coming years, I would say that S&P 500 4,512, Nasdaq 15,853, Hang Seng Index 35,086, and Hang Seng Tech Index 12,213. So why I give prediction for 35,086 instead of 35,000? Because it seems that it makes my prediction more sophisticated and more professional. Okay, thank you for watching. I hope these two sections can help you to make some investment decision in the coming year. If there's any field in investment you want me to talk about, feel free to comment below. Thanks for watching. I'm Edwin. See you next time. Goodbye.